This episode of Bulletproof Cash Flow is brought to you by Realty Dynamics. Learn how people like you can build substantial passive income while creating wealth for the long term through real estate investing. Visit rdyne.com. That's RDYNE.com.
And then I go there, I found an opportunity and stuff like that, and say, okay, well, now that you have like 4 or 5 opportunities, ask the seller if they want to do a vendor take back or seller financing of any kind. And then one of them was willing to do a seller financing on the down payment piece of it. I still had to get the loan from a bank somewhere else.
Working because you want to, not because you have to, is financial freedom. And we want to help you create that. Welcome to the Bulletproof Cash Flow Show. We're going to teach you how to achieve lifetime financial freedom through real estate investment. Your host is a multifamily syndicator and property developer. He's done deals reaching into the hundreds of millions of dollars. You'll hear from experts in all aspects of real estate investment, finance, development, and management. Everything you need is right here. This is the Bulletproof Cash Flow Show. And this is your host, Augustino Pintus.
Hey everyone, it's Augustino. Once you spent enough time with other real estate investors, you'll begin to pick up on certain common goals that vary in for the vast majority. And one of these goals, though, is building strong cash flow. Now, today's guest knows all about this. At the young age of 18, he took a bold step of purchasing his first apartment building while still in university. Now, his journey led him through a successful career as an actuary and later as a tech entrepreneur until he experienced a significant setback during the dot-com crash of 2001. Now, undeterred, he turned to real estate investing as a means of earning passive income and achieving financial freedom. He founded Martel Turnkey, which he has enjoyed rapid success, allowing him to retire from his day-to-day job in 4 short years. Now he is very passionate about sharing his experiences and knowledge with others so they can too achieve their financial goals and avoid the mistakes that he has made when it comes to investing in turnkey real estate. Now with all that, I'd like to welcome Eric Martel to the show. Eric, buddy, thanks for coming on, man.
Well, a pleasure to be on, Agostino.
You bet, you bet. Now, guys, if you like what Eric has to say, you can reach him via his contact page at martelturnkey.com. We'll include a link in the description. Okay, Eric, go ahead and tell the listeners a little bit about your journey.
Yeah, I mean, this is, for me, like my parents, if I go all the way back to my parents, and, they were just living paycheck to paycheck. And, my father was working for a big manufacturing plant and all of that. And he had like a good retirement plan, like a defined benefit pension plan and all of that. And he was basically taken care of. He never had to invest in the stock market. He only took loans for his house and his car, never did any investment whatsoever in anything. And, because he had a defined benefit pension plan, then he was taken care of by the company and he knew that he would get some, a certain retirement, a certain level of retirement. Things are very different now. When I started working and studying, I could see that this was working. These defined benefit pension plan, they're not there anymore. People they're all about 401ks or defined contribution plan where you have to save money. The question is, how much money do I need to have in order to retire, securely, safely, and comfortably? How can you answer that question? That is, this is what actuarial science does, which is the finance of, or the math of financial risk. And then, so we kind of look at that and say, well, okay, if you are going to retire at 65, let's just talk about that question. Like, when are you going to retire? Are you going to retire at 65, 55? What is that going to be? People think they know when they're going to retire. You don't know when you're going to retire. You have some ideas, but 60% of the people don't retire on the day that they thought they would retire. So that makes a big difference. Most of them retire before they were planning to retire because of health, because they have to take care of a sick one, or because of late career layoff. So, when you get fired or laid off at 55 years old or 50 years old, it is hard to find another job with similar pay because now you're competing with all kinds of very young and energetic people that they want to work for half your salary. They are very smart and they're very hardworking. And, as an employer thinking about that, I said, well, I can get two of these guys that are, bouncing around, and I know they're going to work their ass off like 60, 80 hours a week. Or I can get that one guy, I'm going to pay double, and it's going to be hard for me to make him work more than 40 hours a week because he has other things that he's been there and he feels like he's entitled to a certain level of privilege. But so that's just a question about retirement age, right? So you can see that if you're retiring at 55 instead of 65, that's 10 years of income that you're missing. And that makes a massive impact on how you need to organize your saving and think about retirement. So retirement for me is something that's inevitable. I think everybody's number one goal should be to focus on financial freedom. And you do that by building a passive income portfolio.
There's a lot to unpack there because
I know. That's why I decided to pause. I could have gone on and on.
Oh yeah, no, because what you described about your parents, your dad, and it's like because I went through the same thing at one point in history. That was the plan. That was the plan that was handed down to them, and they handed it down to guys like us. And you said, no, you go to work, you take that money, you buy the house, you buy the car, you live, and then you die, and that's it. And that is no longer feasible. I think that plan is obsolete. There's a lot of driving factors to that. We talked a lot about the green room about how currency is becoming devalued. I mean, now it's to the point where we printed $8 trillion over the past 3 years. I mean, we see rising inflation. We see the weakening of the U.S. dollar. You can't have that plan anymore. It just doesn't work. And then when you're talking about how now fast forward, if you are taking on that plan, you're in your 50s working for some company, yes, that you're at risk of getting laid off, and there's nothing you can do about it. What are you gonna do? Go to court? Like go fight somebody? No, of course not. You're not gonna do that. It's a waste of time. Yeah. But yes, I mean, hey, listen, it happens to a lot of older executives that they could be in their 40s and 50s. They get chopped, especially now, especially in when economic shifts there's an economic contraction taking hold. Hey, listen, if I can liquidate this CIO who I'm paying $250K a year and replace him with two directors for $100K each. Hey, I save some money there, and I get two of them. I get some redundancy. Who wouldn't want to do that deal, right? Yeah. And this is why I 100% agree with you. It's like now that program of building strong cash flow, building probably if anybody is out there in their 30s right now, it needs to be doing something on the side to help build some of that wealth. The 30s and higher, I should say, ought to be doing something to build wealth because you never know when your number's up. They'll hand you the box and tell you to get lost.
So, absolutely.
I don't know how many times it's happened to you. It's happened to me many, many times.
Yeah, I mean, for me, yeah, exactly. I mean, it happens a lot. And then the other thing too is that sometimes you think that you've made it, like you're making a lot of money and stuff like that. But that money, this high salary and stuff like that, is going to be, it's easy to get caught into this. And you think that you're very comfortable and you have all that money coming in and you're kind of addicted to that money coming in. Yeah. It's hard to quit your job and then you're just spending it and all that kind of stuff. No, you need to focus on your passive income goal, achieving financial freedom at that time. This is the best time to do it. And if you're not doing it, what happens is that you're going to get laid off. Something is going to happen. Something is going to shift. And then you're going to find yourself, 6 months without pay or 3 months without pay, and then finding a job at, 25% less money or something like that. So that's the real world,
Hey, listen, if you're working for somebody, they're paying you just enough to keep you from quitting. Yeah, that's the way I look at it. Yeah, they're paying you just enough to keep you from leaving that job. And I was in that position too. I'm sure you were too. It's like where you're making a ton of money. Why should I work any harder until they do finally get rid of you? So, and that's when you start panicking.
Yeah, but some people are saying they're surprised. There's some people are surprised. How I'm be paid what I'm worth. No, this is business. You're never going to be paid what you're worth, because the difference between what you're worth and what you're being paid is called profit.
That's right.
So if you want to be paid what you're worth, you need to be working for yourself. There's no other way to do that.
100%.
And
that's it.
You need to work on that as soon as you can. I mean, and that's, to me, we talked about the American dream, and the American dream, I would call it the old American dream. The house with the picket fence, the dog, and 2 kids.
Hey, Augustino here, and I would love to connect directly with you. Text the word books to 844-428-1344 to receive weekly book recommendations from me.
And, the new American dream is not necessarily bad. I think it's very good. And I'm fully embracing this new life where I'm renting my luxury apartment here in Fort Lauderdale. I have an amazing view and stuff like that. If I was to live in this house, if I had bought this condo and paying the property taxes, the mortgage, and all that kind of stuff, it would cost me probably 50% more to live here every month. It would cost me 50% more. And on top of that, I would have had to put 20% down on my apartment, on my condo, to live here. Now, that 20%, that down payment that I didn't put on this apartment, I'm investing that in single-family rentals, and that is providing cash flows that offset my rent here. So this is the new American dream, in my opinion. So this is what, if you're 25, 30 and stuff like that, this is what you need to focus on. You need to kind of think about it. Say, I don't need to buy a house. I'm going to put my down payment to work for me, and I'm going to be investing in cash flowing rental assets. And that's going to help me build wealth, because that's going to appreciate over time. My tenant is going to pay down the mortgage and all the operating expenses, and I'm going to have cash flow at the end of the month to offset, to help me with my personal rent and my personal expenses. That's the idea. That's the new American dream.
Yeah. Well, what's funny is that most people say, well, why would you rent? That makes no sense.
Yeah.
It's ridiculous. Why would you give someone else your money? But I think you just hit the nail on the head there. Is that if you're living in a very nice home,
yeah,
you're dumping 20% into that house. Who's the investor in that house? It's the bank, guys. The bank is the landlord now. The bank is the landlord. You happen to lock up a bunch of equity, so they know you're not going to just leave on them. That's all that is. I mean, it's the same sort of scenario. The difference is you get to use that equity and invest it in something that produces more income than if it were just sitting there and as debt equity in a home.
Yeah,
that you now have to maintain.
Yeah.
Right. So it's very, very hard for people to understand, because I think that it's trying to unwind.
People call me crazy every day.
Yeah. Yeah. But because you're trying to unwind decades of conditioning, and it's very, very hard to do in front of, just 2 guys talking in front of a camera here.
Yeah.
Even though there's plenty of other folks just like us that say the same thing. But it doesn't always hit home, because again, it's decades of conditioning backed by the big banks, the big lenders, right?
So at one point you can like Grant Cardone also, like at the very beginning, like he was renting his house.
Yeah.
And I think he just bought a house now, but now he has like, when you have too much money, you don't know what to do with it, then okay, I'll allow you to buy a house to live in. But or even like Robert Kiyosaki also was renting. He was a big renter for many, many years, and I think he bought a house now. But again, when you have so much money, you don't know what to do with it, then that's fine.
Yeah.
And the interesting thing for me in terms of renting is the more luxurious, the more expensive it is, the better it is for me. Because now, if you're living in a $3 or $4 million condo or apartment, normally the rent doesn't catch up. So the value goes like this and the rent goes like this. So the higher it goes, the bigger the gap is between the total cost of ownership and your rent. So, yeah. And I found that around 500K is kind of like the sweet spot. If the value of the home you want to live in is less than 500K, it could be you could go either way. You could rent or you can buy. It's kind of like half. But if you're looking above 500K in terms of the value of the home you want to live in, then you should seriously consider renting instead of buying.
And you're talking all cash now. You're not talking getting a loan, because really the cost of debt has doubled over the past 8 months, right? So that payment technically has pretty much doubled as well for many people out there. Right?
Well, that's true now, but there's the big thing that people don't think about is the opportunity cost. Is that down payment that is sitting in your house and the only thing that the only way that this grows is with appreciation, and the house appreciate at what, depending on which market you are, sometimes it appreciates at 3 or 4%, and then so it's pretty good, but it's not the kind of thing that you would get if you had cash flow, if you had you have the appreciation, you have the tenant paying down your mortgage and all the expenses, and you have tax advantages that you don't have on the home that you live in.
Yeah, that's right. Well, let's get back into your story here. So you did your first deal at 18.
Yeah.
So let's talk a little bit about that. Let's go back in time and talk about that. So what possessed you at 18 years old to say, you know what, I got to get my first deal going? Like, what did it look like, and what sort of mindset did you have back then?
Yeah, I mean, for me, I was entrepreneurial from a very young age. I was always trying to do things for, I did some plays, for example, at school and stuff like that. I was approaching a teacher and say, hey, I'd like to do a play about this book. And the teacher kind of like recovered and said, what? You want to do what? Okay. So, we'll do that. It was like, and so there's all throughout my life, like it was kind of like that, all the way till 18 years old. And I basically realized pretty early on that my parents were not the best source of information for businesses, for finance, for investment. I realized that pretty early on. I was probably 8 or 9 years old, roughly. Because I was, there was a guy that was, he started his business. He was just doing like what we call a chip truck. I don't know if that resonates anything, but it's basically a food truck. And then he just does like the, hamburger, hot dog, and French fries and stuff like that. And he did very well. He was very well known for his French fries. His French fries were amazing. And often I would just go there to just buy French fries. Anyway, long story. And that food truck turned into him buying the land that the food truck was sitting on, and then build a restaurant on that land, and then buying another land and building another restaurant. Then he ended up with a chain of restaurants. He ended up with stores in the shopping center. He ended up with, a flower shop, a candy shop, and all that kind of stuff. And he started with this food truck. And I was telling my parents about that. I was like, wow, this is amazing, stuff like that. And their answer was, oh, he must be cheating the system. It's like, no, I think it's because you don't understand the system. And I think that happened to be true, is that my parents didn't understand the system. And I realized that most people in that generation, they don't understand the system. They don't understand how the banking works. They don't understand how investing works, how you structure your business so that you don't lose your house and your car if the business goes down the drain. So all these and protect yourself against liability and stuff like that. So I knew basically that my parents were not the best source of information for that. And when I met someone, when I was 18 years old at university, I met someone that was a real estate investor, and he was a community college teacher. I don't know what he was teaching. It was not finance related. It was not math related. In fact, he was very bad at math. and then except basic math. And then, so it was like, and then he built like a 36-unit apartment building. He was investing in nursing home. He was planning to build a shopping center and all that kind of stuff. And he was just a regular community college teacher, not any smarter than my parents in terms of IQ, if you believe in IQ, but much more smart about investing, understanding the numbers, seeing opportunities, and being able to execute on the opportunities to extract profit or extract cash flow. So that's why I kind of, when I met him, I said, okay, I kind of took the university on the side. This was my side gig. And I said, okay, tell me everything. And then I learned a lot from him.
I want to take a pause from today's show to share something that I've been encountering. As I speak to many investors, there's this concern, and the concern is centered around the inflation we've been experiencing and the devaluation of our currency. Now, we've seen some of the highest inflationary periods over the past 30 years. That's up over 8%. The economists actually believe that inflation is closer to 20%. Some say it's even more. Now, what does this mean for you? Well, it means that money that is sitting in your bank account or self-directed IRA that's not invested in physical assets that hedge against inflation are losing buying power. That means that every minute, every second, that dollar is becoming less valuable. You see this every day. You see this in the groceries you buy, the gasoline you buy, everyday items that you're buying on a daily basis are becoming more and more expensive, and you're using a less powerful dollar to buy these items, meaning that dollar is losing value and if it isn't put into a property that produces cash flow, just like real estate does. Now, our team here at Bulletproof Cash Flow has put together a series of weekly webinars that cover real estate investing like multifamily, net lease, and real estate development. Now, these are purely educational webinars. In these webinars, we talk about why real estate offers a powerful opportunity right now and why it makes sense to invest in these assets today. So if you're interested in real estate or want to have the opportunity to get involved as a hedge against inflation yourself, I encourage you to go to bulletproofcashflow.com/webinars. That's bulletproofcashflow.com/webinars. Now you go there. These webinars are 45 minutes and they cover different topics every week. We go over the things you need to know to avoid some of the common pitfalls when it comes to investing while getting you prepared to invest your paper dollars into a real physical asset. Now, if you can't make the webinars, just go ahead and register and we will send you a recording that you can watch at any time. And by the way, these webinars are entirely free. There's no cost to you. This is just something that we do to educate our folks out there. So if you're enjoying this episode, please like and subscribe to Bulletproof Cash Flow. It helps the channel tremendously when you do. Now let's go ahead and get back to the show.
And that's kind of began my journey with investing. So looking at investment properties in just outside of Montreal at the time. And I looked at hundreds of properties and I said, the guy was called Greg. And I said, Greg, I don't have money, right? And he said, don't worry about that. He said, find the deal, we'll figure out the money later. In the back of my mind, I thought, okay, he's probably going to lend me the money. So I'm just going to play along. He's going to lend me the money and blah, blah. So, and then I go there, I found an opportunity and stuff like that, and say, okay, well, now that you have like 4 or 5 opportunities, ask the seller if they want to do a vendor take back or seller financing of any kind. And then one of them was willing to do a seller financing on the down payment piece of it. I still had to get the loan from a bank somewhere else. But if I was able to do that, then I did that. And that's what happened. I ended up finding a loan from a credit union for 80% of the loan. The seller financed me for the 20%. And so I was, zero cash and cash flowing after paying all my lenders and stuff. And I still remember to this day, I think I had like $200 in the bank account and I had to write a check for like $120, I think, for the credit union for the application. And I was like, well, this better works out because I'm going to be eating peanut butter for a peanut butter sandwich for a few weeks. So Yeah. So that's kind of how I bought my first apartment building.
You know, it's funny because the first step was just taking the action of trying to find a deal, because you had no idea how the financing was going to take place. And I think that's what usually stops people right there. It's like, I can't get the money, so I'm not even going to bother looking.
Yeah.
And then they just put their hands up, and then they just give up, and then just sit back in front of the TV and start, go back and go get back to the matrix, get plugged back in, as opposed to what you did and what your professor told you, your mentor. He says, try to find the deal, and then work it out afterwards. It's like I would venture to guess that at the time you got that deal, and you had 4 or 5 deals, like you said, your mentor gave you some options of what you can propose. You had no idea that you could even do anything like that. And you had no idea that the guy would even do that deal, So, I mean, that in itself, what you just described is a cherry deal. If someone just takes back that kind of money, I mean, and the cool thing about it is that model will work on just about anything. It doesn't just work on small multifamily or single family. Mm-hmm. I did a 200 unit multifamily deal just like that, similar to that actually, even less money I had to bring to the table, So, and we had no idea how we were going to put that deal together. Yeah. We had no idea, my partner and I, and we did it. We figured it out. So
I think a lot of multifamily investors, I think or even that single family side, sometimes you have like portfolios that are being sold. And a lot of time what these people are doing and what they were always looking for was passive income. And now they get to a certain age and it's like, okay, well, I don't want to deal with all these things anymore. Like, even though it was pretty straightforward, I don't want to deal with all that. And I want to move my money. I want to move my money to another type of investment. A lot of them were moving into triple net. And then because it's less headache. But in the meantime, if you offer them to say, hey, you know what, I'm going to pay you a certain amount of money every month, guaranteed, and you're going to have a lien on your property that you know very well, that you're very familiar with. And so I get passive income. I don't have to worry about it. So, so this is good. This could be a good deal for them as long as this is what they're looking for, So understanding why they're selling the properties, why they, if it's such a great property, why are you selling it? And, then they tell you. So, and I've done a couple of deals like that. The person was literally moving his money to a triple net. And I asked him, I said, do you want to do like seller financing? He was not interested, but, it could have, if he would have been interested, then it could have, made it a lot easier for us to get the deal.
We have a fund, like I mentioned in the green room, we have a fund that buys net lease assets. And we've already done, ever since these rates really exploded, we've been shifting more towards an owner finance model, which works out great for us and works out great for the seller, So, because what happens is the sellers out there taking less of a tax hit, and for us, it works out great because the money is cheaper, so to speak, right? Yeah. So we hit the return targets, which is a win-win for both sides, So, man, it's most people very rarely do they consider that. They just consider conventional financing because that's the way most people have been taught.
Yeah, I mean, it's also a lot easier if you have all cash.
Yeah.
Just write a check for $2 million or $5 million. It's also easier that way, but the returns are not that great, and so that's why leverage is fantastic. And seller financing, it could solve a big problem.
Yeah, that's right.
So solve a problem for both sides. The seller might be looking for something like that, might be looking for passive income without the maintenance, and then you're coming along and you're offering that to them.
Yeah, you kill 2 birds with 1 stone. Yeah, that's great. So back then, you had, I would imagine at 18, 19, 20, like you didn't really have too many limiting beliefs. It's just more of a lack of education, so to speak. I seem to think.
I mean, I had the voices of my parents in my head.
Yes. Yeah.
So that's the thing, is that all the business people are crooks, and they, blah, 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 because of how they saw the system. And, and then I kind of like when I started doing this, I started realizing, okay, well, they just don't know. They just don't know how the system works, and I want to know how the system works.
Yeah.
And I started learning about that. And in those days, there was no internets. There was no internet, and no chat GPT that you can just talk all day and teach me about the financial system and all that. So you didn't have all that. Nowadays, this is amazing. There are so many people that know how to invest in real estate, that know how to put a deal together, that knows how to find opportunities. It's amazing. This was not like that, 20, 30 years down, 30 years ago. So this is great. Now, the only thing that's needed is now that you have all this knowledge, you have to take action and do something with it. Find an opportunity and then and execute on it.
Yeah.
And in my book, what I call Stop Trading Your Time for Money, what I found is that a lot of the investors that I'm talking to, they're kind of all over the place. They see, oh yeah, I'm going to flip this house, and I'm going to flip this other type of house in another market with another construction team, and I'm going to do self-storage because this guy is making better returns on self-storage, and I'm going to do multifamily, I'm going to do single, I'm going to do commercial, it's just like, no. And the number one thing you have to figure out is what's your goal. Your number one goal should be financial freedom and build that passive income portfolio. Then focus only on the strategies that achieve that are cash flowing, that are building the passive income. And then you figure out which market makes sense and what time and resources are needed for that. You want to minimize your risk. And this is why, the turnkey model, I'm a big proponent of the single family turnkey, the turnkey single family rentals, because it's ready to go. You have less risk. You could do the BRRRR strategy, a little bit more risk, but still, you have also higher returns. Multifamilies, when it's a good time with multifamilies, I think this is also very good, but a little bit more money, a little bit more time that's going to be required for that, right? So
right.
Unless you do syndication, then, you're really hands-free. You just give your money and then you get your return after 3 or 5 years or something like that.
Yeah.
So, yeah. So all these things, this is why, all these things need to be in alignment. I'm seeing people that invest, I want to invest in cash flowing property in California. Well, good luck with that. Yeah, you can find them in Fresno and all that kind of stuff, but you are not in a landlord friendly state. So when things happen, you're kind of stuck. You can't raise the rent to market rent, or to inflation so I have people that own apartment buildings in LA, and they haven't been able to raise the rent for the last 2 years during COVID. And now the government is saying you can only raise the rent 2%. Well, I'm sorry, but inflation last month was 6.4%. So I'm running a business, but I'm living off the income of that, So why am I being penalized because that's my source of revenue when, other people decide that they want to work 9 to 5 for their source of revenue? So that's why you have to pick the right market. All these things need to be aligned so that you achieve your goal and you can, build that passive income, achieve financial freedom and multi-generational wealth.
Yeah. And I think part of it is that breaking that traditional way of thinking, as ultimately it comes down to, So and I think you touched on this already, but I'll ask you anyway. So investing in rentals is definitely the better way it's the new way to achieve the new American dream, like I said earlier. Yeah. Why do you find it better than doing the retirement savings, the IRAs and all that fun stuff? Why do you think that rentals is better than doing that?
Oh my God. Did you say 401k? So first of all, again, you're going back to what's your plan, right? I want to retire early. I don't want to wait till I'm 65. If I can retire at 50, I want to retire at 50, right? If I'm a young person, like 25, like, why would you think that, oh, I should retire at 65 and I'm going to plan on 65? Why don't you plan on retiring at 50 or 45? But if that's your plan now, then if you want to retire at 50 and say, this is my goal, I want to retire at 50, I have a passive income portfolio, blah, 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 or I want to invest and I want to save a lot of money, enough money for me to retire at 50. Well, 401k is not going to be the choice for that, because you won't be able to extract money from your 401k at 50. So there you go. So don't put money in 401k. If that's your plan, don't put any money in your 401k, because you won't be able to extract it. And then anytime before 58.5, you're going to have to pay penalties for extracting money. Not only are you going to have to pay taxes, you're going to have to pay penalties on top of that before 58.5. So then 401k is not the vehicle for that. You want to do something else. So what is that something else? Well, I tried the stock market. We didn't touch about that, but I was heavy in the stock market until the dot-com crashed. And I literally lost millions of dollars. I was wiped out by the dot-com crash for the most part. I had tons of stock options on the company that I was working with in high tech. And basically was wiped out of that, lost millions of dollars. And that's when I thought, okay, well, I need to be in control of what's going on. Like, I want to be in control. And the market, the stock market, nobody's in control of the stock market. So one day they decide, oh, it's great. And then another day they say, oh, this is a bubble, we have to sell. And then the whole thing tanks. Has nothing to do with how well the business is doing. It just has to do with how the market is perceiving the economy and what's going on, and the concept of value. Is it, all that kind of stuff. So that's my point on the stock market. Yeah, should you invest in the stock market? Yeah, you should invest in the stock market. I still invest in the stock market. Better liquidity, better all kinds of, there's good stuff about stock market. But this is not where I want to have the most of my investment. I want to have my investment in something that's solid, that can use leverage, because it maximizes my return. I want something that's going to appreciate over time and provide cash flow and tax advantages. I mean, you can't beat real estate on that front. There's nothing like that. That's right. In the stock market, you can't have long-term leverage on stock purchase. Yeah, you could. Well, might revisit.
Yeah, see, and that's the thing. I don't do anything with the stock market at all. It's not because I don't hate it or anything else like that. Yeah. It's more like the amount of effort required to really learn and dig deep and do the research on a specific company to figure out if they're even going to be around in 6 months, let alone a year or whatever. It depends on the company, Yeah. I'm not willing to make that investment of time, because I don't think the return is going to be worth it, at least for me anyway. It's like, I'd rather do the research on a building, do the research on an area, know that market, build it in that market, and wait, and just to your point, leverage a bunch of cash and get the cash, throw it in there and wait it out and get cash flow along the way. To me, it's a very simple thing, because I was just like you. I tried that whole stock thing, years ago, and it didn't really lead anywhere for me. Nothing really happened. I wasn't able to amplify the money, and that's a big part of it. If you can't amplify the cash, meaning, that's a beautiful thing. If you put in a third of the money, the bank comes at you with 2/3 of the cash. I mean, you can't do that with stocks. You just can't. Yeah. And that's why it's like, as soon as you realize that, that's huge. That's absolutely huge.
So I think, to me, like, if you don't know how to make money when the stock market is going down, you shouldn't be in the stock market.
Yeah.
So, if you're only, that's what happened in the dot-com era, right? So it didn't matter where you threw your money, it was making money. I was working on Wall Street and a couple of financial institutions over there at the time. And then just like, you had like, was that CNBC everywhere, every screen at the front desk. The receptionist was investing in the stock market and said, "Oh, I bought that. I bought pet meds or whatever it was. You bought everything."
Yeah, I remember that one. What was it? Pet?
Yeah, it was pets or something like that.
Yeah, I forget what it was. But I remember that one. Yeah.
So everybody was investing, and everybody was throwing money at it because there was all these IPOs. Like every week there was a couple of IPOs and all that. The companies were losing money like crazy, but the stock market was going like that, going up. So a lot of people were investing. Same thing that happened during since 2010 all the way till today or last year is, you could throw a dart. A monkey could throw a dart at the Wall Street Journal and pick a stock and it would do well, And so this is, now it's different. Now you have to know what you're doing. And, it's not obvious right now to invest. So if you know what you're doing, then you can invest it.
Yeah.
On one side, you have to also consider that if you think you know how to pick it and consistently, then you're delusional, because nobody can pick. According to, all the studies that have been done, is that nobody can pick the stocks. If they did, they would be consistently. I think there was only one guy that was able to pick the stock relatively consistently, beside Madoff.
Right.
And always make a profit no matter what. So I mean, that's what in Berkshire Hathaway Warren Buffett is saying. He said, you shouldn't pick stocks. If you think you can pick the stocks, then better than all the professionals that have all the models and all of that, then they're delusional. So pick and
the connections
on the whole market and ride it.
Yeah, I mean, usually these analysts even have connections inside the company to know what's going on. They know the CEO. They talk to him all the time. I mean, it's like to try to compete against that is very, very difficult.
Oh yeah, I mean, they literally attend all the. I mean, you can attend them too. You can attend their conference calls and stuff like that.
Yeah.
For the quarterly conference call. And you can hear the analysts on there asking questions to the CEO. They call them all the time, or they call investor relations, and they have the time to do that. They have an army of these analysts. If you think you can compete with that, well, good luck.
No, I think that the best way to do it, I like real estate. I'm a little biased, but you know what? I help people get into the real estate game with our accelerator, the multifamily stuff. I know that you have a way to help people get into the single family space, right? Yeah,
that's right. So, this is the nice thing about real estate, is that it is relatively simple. I mean, everybody knows the concept of a house, and everybody knows that, okay, I'm going to have a tenant going to rent the house, and I'm going to have some expenses on the house. There's nothing complicated about that. You don't have to know about eagle spread on your options. You don't have to do covered calls. You don't have to do any of that kind of stuff that you have to kind of like know in the stock market world. And then, yes, you're right. So we started a new program called Flip System, and it's based on our track record with Martel Turnkey. So we've done like over 1,000 single family rentals over the last 10 years. We've done very well. We've built processes in place. We've built an application to keep track of all our properties. And basically, a lot of investors were coming to us and say, well, yeah, I like the turnkey models, but I'd like to also be more hands-on at this point. I have a couple of turnkeys. Now I would like to do like a BRRRR strategy, which is when you buy the distressed property, renovate it, rent it out yourself. Can you help me with that? So we went down the road of mentorship. And then because I was a big proponent of that, because my mentor that I had, my rich dad, poor dad moment when I was 18 years old. So I wanted to kind of replicate that. And but that kind of worked a little bit, but people wanted more. So that's why now with Flip System, we're packaged literally everything. So we have the training, kind of like just a regular training, so that you know everything that you need to know, the terminology, the process, blah, 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 things that are very repetitive. So you do that. But we also hook you up with a customer success coach. So someone that has been with Martel Turnkey that knows how this works, how the business works, and is going to coach you along the way on how to invest in real estate. You also going to have access to a property tracking system. So this is a software that's going to keep track of all your properties. You're going to enter them, and then you're going to be able to see all the calculations automatic right away. You're going to be able to see, oh, this is better. The ROI is much higher if I just flip it versus do a burst strategy, and then what's my return after refinancing, all that. You can see all these numbers in there, and very quickly you can make a decision. And then we put you in touch with the missing kind of like ingredients from all these other programs out there is we put you in touch with the team on the ground. So on our side, the team is the acquisition team that's going to find deals for you, and they're going to put you directly in your property tracking system. Then we're going to put you in touch once we identify a market that's ideal for you. We're going to put you in touch with the property manager, the construction person there, the GC, and then we connect also the dots with the hard money lenders, with the lender if you want to do the refi at the end, the insurance company, all that kind of stuff. We connect you with everything that you need to get started. And literally all you have to do is have the money. Second, being able to look at the opportunities and be willing to say, get it, put an offer. That's the thing. And this is where it's not the money that's the problem. Then you have everything. You have no excuses to not do it.
Yeah.
Problem that people are having right now is, can I push that button to say, make an offer? And so we're seeing about 97% people success rate right now with our student. And so things are going pretty well.
I mean, I'd say that like if any good coaching program worth its weight, if you invest 5, 10, 15, 20 grand into that deal of coaching, you'll easily get that money back and then some in a fairly short amount of time, actual cash. And I'm not talking just a knowledge, which is very valuable too, because that's knowledge you can carry with you for the rest of your life. But the actual money that returns, people don't think of it that way. They have this, they're afraid to make that investment in themselves, because I think a big part of it is overcoming some of the scaredness, so to speak. But I mean, you've been at this for a while. I've been at this for a while too, so it's kind of like, for me, I mean, I don't consider it a gamble when I'm taking down, a $16 million deal or $100 million deal. Like, I don't even think about it. Is that any different than investing in yourself 20 grand? I don't think it is. Not at all.
Yeah.
Not at all. So very cool. Well, we covered a lot of stuff here today, Eric. If you had one piece of bulletproof advice for someone listening, what would you tell them?
So I would say that, make sure that, financial freedom is your number one goal. And then all the decisions that you make should be focused on that to make that happen. And, some decisions are hard to make. For me, one of the hardest decisions that I made to make my goal a reality was to sell my house.
Yeah.
But it just made sense, and it made me financially free almost instantaneously.
It's the biggest burden for many people. They didn't realize it. I mean, it's I am doing the same thing you're doing, right? And when you realize that you can go anywhere on the planet when you free yourself from that ginormous burden.
Yeah.
And you can take that equity and invest it in a cash flowing asset. Just that alone, that little simple nugget, just from that, this whole discussion for people listening, that simple nugget could basically change your life. That little thing right there,
Yeah.
So yeah, it's phenomenal. All right, guys. Well, if you want to reach out to Eric, you can reach him via his website at martelturnkey.com. I hope you got some insight on the allure and power of real estate investing. And it's really about creating a life of freedom and controlling your own destiny. So thanks for tuning in, guys, and I'll see you in the next episode. Take care.
You've been listening to the Bulletproof Cash Flow Show. We hope you've enjoyed the show. We know we had fun. Make sure to visit our Apple Podcast page and leave us a 5-star review. We hope you've gotten some useful and practical information from the show. For real estate coaching, events, and resources, head up bulletproofcashflow.com. Till next time.
No information in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this show are limited to accredited or sophisticated investors. Any investments will only be made with proper disclosure and subscription documentation and subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice.